Hello everyone and welcome to today's major markets update for April 20th, 2022. It is Wednesday and we are still, or I am, still feeling our way around on what exactly is happening short to intermediate term with the markets. Long term, I remain bullish, but I think thanks to the Dow Jones, things start to clear up. It's very close to confirming a impulse higher. So let's see if we can finally get that confirmation out of the way, and then we can simply start looking for corrective pullbacks that become buying opportunities. So yes, we are tentatively moving forward. It's close, still no real resolution yet. Of course, tech was up and down today. It's still the same old story with few indexes rallying and everything else crashing. It's going to be that way for the foreseeable future, unfortunately. So let's see what we have on the charts. Where is my, let's see, my logo. Oh, I don't have it here. Never mind. We're going to start off with the Nasdaq. This is the regular Nasdaq. In my humble opinion, we did 5 waves lower from the uptrend high in late March and are now working our way higher for the B wave bounce. I originally had wave 5 of A labeled at yesterday's high. It went marginally higher at the open today. Supposedly, the news said that investors shrug off the news that Netflix lost 200 subscribers and kept crashing. My update on investing.com on Netflix was really off by the mark, but so be it. Once in a while, you see a loud and clear 5 waves lower and the market decides to do something else. Again, bear markets, downside surprises, upside disappoints. So since today's open, it's been down for the Nasdaq and Nasdaq 100. So did the investors all of a sudden have a change of heart? During the night, they were all optimistic, and then at the open, they were all pessimistic. Did the optimists leave the trading floor and that they open a bottle of pessimists? Again, news doesn't explain anything. It's just absolute utter BS. Absolute utter BS. Have they interviewed these people overnight on why they were buying? Have they interviewed the people today? Me, you, anybody who's trading and investing, whatever you're doing? Nobody. All right. It's just a pure opinion. So we go by the numbers and that's all. And with the numbers, we can often forecast quite well what's going to happen. So I think we've completed 5 waves higher for a wave A, and we're now in a wave B of B. That's the preferred view. Could be A1, B2, but I prefer this as the completion of a impulse higher. I'll show you that for a minute for the Nasdaq. Okay, and then we are now correctively moving lower, A, B, C. Again, 5 waves lower doesn't mean a thing. The perma bears and regular bears always think the end is near when we have 5 waves lower. Why is it actually irrelevant? Because we have several types of corrections that have 5 waves in them. A zigzag is a 5-3-5. Here I'm pointing towards a zigzag. 5 down, 3 up, 5 down. That's not bearish at all. It's corrective. Then we have 5 waves down as a C wave in a flat. 3 down, 3 up, 5 down. Again, 5 down is not the end of the world, just like it was 5 down in 2020. The March 2000 or the COVID crash was 5 waves down of a massive, large, irregular flat. And look where we are now. So again, 5 waves down, if anybody mentions it and becomes uber bearish, please remember we need to know where the 5 waves are within the bigger picture. So I still think this is a larger zigzag developing as a wave 2 for the technology sector. Okay. Again, what the technology sector does is not necessarily what the S&P500 or the Dow Jones or the semiconductors or the IWM will do. All of them are clearly and obviously, for as long as we can remember, in utterly and entirely different wave counts. Once they all have bottomed for their respective corrective price action, they will align. Most of the time, markets align at bottoms and start to disalign at tops. So what have we so far since the high at today's open? This looks still kind of corrective. If we assume that we bottomed for wave A of B, topped for wave B of B, then we have an ideal wave C of B here. We cannot, of course, go below this week's low, then we have some sort of very complex wave 4 on our hands, an A, a B, and a C. That is the alternative, and then we're still going to go lower and still going to go higher. So again, the short term is going to be fraught with lots of twists and turns. Please be careful with that. Trade it accordingly, trade it with tight stops, all those things, take profits. It can be extremely sloppy. But this is my preferred view. We're going to bottom here for a wave C of B and then rally. We haven't reached even the nominal lower end of the B wave target zone, so I still expect a little bit more upside. Maybe Tesla's earnings will do the trick. I don't know. What we do know is that we have an impulse higher into the recent uptrend high, and that I'm still looking for this A, B, C pattern to fill itself in. That remains the same. How exactly it's going to fill itself in to be determined. Again, this wave 4 can still be here. Okay, can be very complex, doesn't have to be as straightforward as I showed you. And then we're still going to go for wave 5 here, maybe some to be determined. Again, short term is fraught with lots of twists and turns, especially in corrections. But if you decide so to go long, you have long trading signals, all those good things, then please make sure you trade appropriately, small position sizes, tight stops, take profits quickly, all that good stuff. So here's the Dow Jones. The Dow Jones did pretty good over the last couple of days. Look where the Dow Jones is. It is testing its recent March highs. Compare that to the Nasdaq. What a difference. The Dow Jones is here, the Nasdaq is here. This is two worlds colliding, two worlds apart. I don't know what to tell you. But remember, technology already topped in November last year, and the Dow Jones didn't top until January this year, 2 months. So this divergence has been going on since November quite tremendously, and it starts to look impulsive to the upside. 3, 4, 5. This is the potential. Okay, if this is not going to fill itself in, then we have to reassess something else. But so far, we bottomed right here in the 4th wave target zone. No overlap with wave 1, off by 6 points, but no overlap is no overlap. And we topped here for wave 3. So now let's see if we can move the needle higher for a 3, 4, and 5, following an ideal impulse wave pattern. Zooming in, here is the hourly chart. This looks like some sort of double zigzag wave 4, which fits with the idea that we have rule of alternation. Wave 2 here was a irregular flat, A, B, C. I like it. Okay, 3 down, 3 up, 5 down. And this is then a zigzag, rule of alternation. And let's see what we have here so far. We've topped so far right here in the ideal wave 3 target zone. A 4 and a 5 is still possible. The wave 1 high is here. I question mark it all because this can still be A, this can B, this can be C. It can all be fraught with many overlaps and all those things. The overlap line is right here, which is the, I think, the March 14th high. We shouldn't go below it. It's right at the 76.4% retrace. Again, we might just miss it by 4 points or 6 points, just as we did here with this 4 and this potential 1. I still have question marks, A, B, C. We haven't done 5 waves higher yet, but clearly the Dow Jones is progressing quite nicely. Technology is here, the Dow Jones is here. Unbelievable, absolutely unbelievable. You bet on the wrong horse, you get destroyed. I'm terribly sorry about that. That doesn't make my work any easier. I need to apply different wave counts to each and every single index. It's amazing. Eventually they will align, but right now this soup, this swamp will continue. I'm sorry about that. I wish it was different, but so be it. We treat every single thing the same. So if we go below 3490, 34,900 on the Dow Jones, we most likely will not impulse higher, but it's starting to look pretty darn good. This looks like an impulse higher, corrective lower, clearly an impulse higher. Let's see if we can go corrective lower. We should not go below 34900. We can still make this into a ending diagonal wave 5. I don't like them too much, but so be it. Then we're going to look at the semiconductors. Again, look where the semiconductors are compared to the Dow Jones. Now, the Dow Jones is the bellwether. It's the mother of all indexes. If the Dow Jones is going to make 5 waves up, then my life is going to be much easier, because then we have an impulse. We're going to look for a wave 2 retrace, and then I prefer the wave 3. We don't know yet if it's going to be A, B, or C. This could be a very large flat with wave A here, wave B here, and then another C wave. So we remain objective, and that we still have the potential for this primary fourth wave to become much longer in time and price. It would fit very well with the long-term wave counts I'm going to show you on Friday. On Friday, we're going to go back all the way to the 1920s and then look at the yearly candles to see where we are in the bigger picture. And the yearly candles tell a very nice story also, in that we have not yet topped out, in my humble opinion. The yearly candles still seem to miss a down move and an up move. So please keep that in mind. No method is flawless or faultless, but it's a quite good line of evidence in that we still need to find a final impulse higher. So bottom line is, looks pretty good here for 3, a 4, and a 5. Okay, this is on the daily time frame and the hourly time frame. Pretty much the same here, just different labels. I throw in different labels also to show you that labels really don't matter. If it's a 3 of a 3, it doesn't matter if it's a micro 3 of a minor 3. It's all potato. Okay, we can all label things the way we want to label them. Bottom line is, are we in a third of a third wave, or are we not in a third of a third wave, right? That's the bottom line. How we exactly label that one, it's potato. Semiconductors look still pretty good here for this wave 4 and then a wave 5. It's very possible. Again, doesn't have to mean the Dow Jones will go down. Not at all. We are quite some ways apart in wave count. And this wave 4 here can still become much more complex. The IWM, well, the IWM did a nice pop today, or the Russell 2000. So I'm starting to like it a little bit more. It can still be a wave 4 if we, of course, start to overlap with this initial decline, then it's not. But I wanted to bring to your attention this potential leading diagonal wave 1 for the IWM. It is still very possible. Okay, we haven't gone below the 195 level. That was the key. Any lower, 195, we don't want to go any lower. So we have 3 waves up, 3 waves down, 3 waves up, 3 waves down, and then a potential other 3 waves up. It can be a nice leading diagonal. Okay, 3 3 3s. Diagonals really don't have any rhyme or reason. It doesn't have to be 5 3 5 3 5, as some people claim. I've seen 5 3 3 3s. I've seen 5 3 3 3 5s. It's all there. I can show you the Nasdaq 100, and I will do it right here, right now, to show you what a leading diagonal can look like. And please tell me that is not this one. Let's see here. Not this one. Here. So here is the leading diagonal in 2019 for the Nasdaq. All right, 1, 2, 3, 4, 5. Look at this. This is loud and clear. 5 up, 3 higher, 3 down, 3 higher. Okay. All in all, it is 9 waves on corrective pullbacks. So that is quite nicely a impulse. Okay. So please remember, this is a leading diagonal. How weird this looks. This is nothing that we see in the textbooks. Okay, so can it become like this? Sure. I would call this then probably an expanding leading diagonal. Very possible. I've seen a few now over my lifetime, fits with the market environment we're in. So if this is going to trend higher, so the cutoff here is for the IWM right there. Okay, if we start overlapping with this level, then I'm going to look for this to fill in. 5. Remember, diagonals are extremely tricky. And of course, we break below the lows here. This is the other option. And then we're going to go lower. So you're going to tell me the market can go lower and go higher? Yes, I tell you exactly that, because right now we're in this utter soup. Okay, here's like vermicelli. Here's like the meatballs. Here I find some chicken bones. It's all one undesirable mess. So as long as we're stuck in this trading range, we break out, we're going to go that way. We break down, we're going to revisit things again. So we'll know soon enough what's going to happen. I wish it was clearer, but again, we're feeling our way around to see if we are indeed moving forward. Okay, we kind of know where things are, and it looks like we're clearing up thanks to the Dow, but we don't have full confirmation yet. So please keep that in mind. We're still in the initial stages. And I will also show you work from other people. If you think I'm presenting confused options, just wait a second, all right? So here we have the leading diagonal, can be anything. Same here for the S&P 500. It looked pretty good yesterday with a top, but the market decided to tag on a slightly higher price, and looks like it's now correcting for this wave B and then the wave C. Again, I don't know yet where this wave B will bottom, so I cannot project exactly where this wave C of B2 will top. Okay, so we cannot look around too many corners at the same time. If we kind of fall in this target zone, reverse and break out, then we can nail it very much. Please note though that we've done the bare minimum for this B/2 wave. Okay, we've done the bare minimum. That's it. And of course, at any time we break below this week's lows here, then we are in a pickle. Okay, we are in a pickle. The preferred path is, of course, this. We're going to kind of go a little bit in here and then this way. Okay, and then we're going to go this way. That's the preferred path. But the short term will be fraught with lots of whipsaws. And I'll show you it here. This is my wave count I had made yesterday. Okay, this is the wave count I made yesterday, where there were enough waves in place to already consider wave A done. Again, the futures market decided to tag on slightly more waves. Now we can start to see 5 waves higher. If we're going to zoom in here, for example, let's zoom in here. I don't know what this is. Look at this mess. This is where you don't want to focus on the trees, right? Look at all these trees. What is this? Is this a pine tree? Is it a birch? Is it an oak? Is it a California oak, a palm tree? I don't know. Not even going to be bothered with it. So here we go. So then this is probably A. Okay, so we simply anticipate, we monitor, we adjust, and we should then bottom for this wave B anywhere here. Okay, anywhere for this B wave. That's still the preferred view, and then we get the C wave. Okay, that's still the preferred view until proven otherwise. Because the alternative is, as I've showed before, that we have a similar path as we had for the Nasdaq 100 show. That we had a truncated wave 5 of 4. Okay, a truncate, and that we did the impulse higher, because we know shorter term we have a nice impulse higher. 1, 2, 3, 4, 5. Okay, so that remains the option. Then we track along the same path as the Nasdaq and the Nasdaq 100, and the Dow Jones is in a different world. Again, wave A, wave B, wave C, and then lower for this path. It follows quite nicely with the Nasdaq 100. Bounce, drop, rally. Okay, this will wrong foot everybody, because everybody is so nauseatingly bearish. If you don't believe me, here is a view of what is this consumer sentiment by JC Parrott. I can highly recommend you follow him. Lots of good stuff. Fun guy, great work, all these things. Look where consumer sentiment is since 1978. It's in the absolute utter doldrums. Okay, it's as low as in 2008, as low as in 2010. It's as low as in 1980. And look what the market did. Okay, so the fun thing is, and actually people ask me this over Easter as well, has sentiment and inflation and recession and all those things already been priced in? Of course they have been priced in by the market. We all know about it. Since we're all participating in the market has priced all this stuff already in. It's nothing new. The market is all about tell me something I don't know. All right, everything else people keep regurgitating. Hawkish Fed, interest rates, tightening, inflation, supply line issues, I don't know what. All of it is known, it's priced in. The market is forward looking, so that's water under the bridge. Tell me something I don't know is what the market is looking for. So consumer sentiment is in the drain and doldrums, down the drain, so to say, and that would fit with even further lows if we can get this potential ABC pattern. That is a very nice setup. Alternatively, of course, is this pattern, right? This is what the bears want to see. It's fully possible, okay, that we have A, B, and then we get the drop. This drop and this wave count will not be validated until we, of course, fully go below the February lows. right? I wouldn't be surprised if we get here, that all the bears are completely salivating and nobody ever wants to touch any stocks forever anymore. And then 6,000 is just around the corner. Wouldn't surprise me. It would not surprise me whatsoever. Again, that path is not going to be opened. This door won't be opened until we break below this week's low. Okay, and then we need to break, of course, below the February lows to fully confirm. And I know then we're quite a ways already, of course, from a trading perspective, that's something else. But once you start breaking below here, from a trading perspective, you can start to anticipate this. We track it and we'll monitor it. And then we bottom nicely in the 4,000 target zone. Wouldn't surprise me if we just go marginally below the February lows if this is the case. Again, we're trying to find our way out. This path is fully possible as much as this path is possible. Okay, so we have those options on the table. We're feeling our way around, and so is the market. The market is also trying to make soup. It will have these two doors. Intermediate term, it will have these two doors. It will eventually choose. Which one, I cannot tell you. Okay, so moving on, can other people tell me then what's going on? This is by Xenia, great stuff, CT Financial Services. She has the same two options. Okay, here she has the potential wave one, just as I showed you here for the S&P 500 and as I showed you for the Nasdaq 100. And we're now bouncing and then dropping. So A, B, C, drop. Potentially all of wave two has completed already. So there we are. We have same two options on the table with a alternative flavor as well, because we did 5 waves higher. So this is 1, 2, etc. So also she has several options on the table. That's that. Now we're going to look, for example, Pretzel has to say. Well, it can be a diagonal, for example. So it's up, down, up. Very possible. Or we're going to drop and we're going to rally. Also possible. I don't find it likely, but it's possible. So please keep that in mind. That's 2 more options on the table. Okay, and then here is work by the guys from ElliottWaveTrader.net. Yeah, A, B, C, alternatively all of one, and then maybe something else. This is, I think, 1 option, 2 options, 3 options on the table. So also here we have 3 options on the table. What a plethora of options. So you say, well, we'll throw this whole Elliott wave out of the window. But this is because we're pretty much trading in this tight range here that we've had for a long time, right? We have not made much progress over a month. Then we have a lot of options on the table. I therefore, unfortunately, have to continue to use the hourly charts to see which of these paths is going to fill itself in. We have enough if-then scenarios on the table, so I wouldn't be too surprised if we see this B wave, however low it wants to go. We'll have to see. And then a C wave, A, B, C, drop, rally, or A, B, C, and then the bigger drop. Those are my 2 preferred options for the S&P 500, as well as for the Nasdaq 100. I think the Dow Jones is doing something entirely different. So is the semiconductors, and so is the IWM. So the IWM is completely out of whack compared to the semiconductors and the Dow Jones, the S&P 500, and technology. Semiconductors is out of whack with the other ones as well. So the 2 different options. Dow Jones also different. Okay, so we have for every flavor, we have a glass, right? So pick your flavor and we'll fill the cup with it. And unfortunately, eventually that will work its way out, and I wish it was different. I really do. Let's have a quick look at some market breadth readings, I would say, see what they can help us tell. How are we doing on the new lows? The new lows are dropping. That's good. That's definitely good. I like it. That's a good sign. We don't want to see more new lows. We want to see less new lows, but still not really below the danger zone. We need to get below 50, but it's moving in the right direction. That's good. And let's look at here the PMO buy all sell all indicator. Haven't updated, or it hasn't updated that one yet, because that doesn't happen until about 2 or 3 hours from now. And we do have a buy signal here. So that's good, and the market has so far complied quite nicely. So we're back on a buy. So the sell is over, and we're back on a buy. So that one also suggests higher prices. Okay, I like it. Not too bad. So that's really where we are, still trying to figure our way out. There are a lot of options still on the table. We'll have to take it day by day. This is not yet a market environment to trade in aggressively, not at all. Longer term wise, I still think one would be fine. As I showed you with a tweet on Monday, remember the time frame. The bigger the time frame, the more likely you're going to have a winning trade. The shorter the time frame, the more likely you have a losing trade. So please always keep that in mind. Trade different time frames. You want to diversify, truly trade different time frames. Don't trade cryptocurrencies and Nasdaq. They're quite related, actually. Don't trade gold, because everything eventually gets sold off in the bear market. Okay, every asset is considered a risk in a bear market. So please keep that in mind. Trade different time frames, where maybe the shorter term will give you a nice counter trend rally. In the long term, you're still short, that type of stuff, and vice versa, of course. So we're still feeling our way around. There's so many options on the table. I don't even want to summarize it. The charts tell it all. So look at the charts, look at where we should bottom. But remember, this is still a tricky market environment where we might miss a few marks, but the general gist is still, I think, correct. And eventually we'll clear things out. If we get 5 waves up on the Dow, excellent. That'd be so nice. I hope we're going to get it. We'll see what we have on Friday. We know which levels to watch for on the breakouts and the breakdowns. Take care, trade safe. See you all on Friday. Bye.